Hey guys, how's it going? Lewis Harding Investor and welcome back to my channel. In today's video I'm going to be analysing Facebook stock, and I'll be doing this by using fundamental analysis and then using a DCF calculation to get to a fair value. Let's get straight into it. So let's go through the business summary of Facebook, and to be fair, Facebook is broken down into 4 different parts. This includes Facebook, the social media platform itself, where you can connect with friends and family and discover various different things. It's basically the main and the biggest social media platform in the world. Number 2 would be the Messenger app. This was taken off the original Facebook app. It's a standalone product now. It's essentially just another messaging app from Facebook, connects to the actual Facebook social media. Instagram is the 3rd product. This is where people connect through sharing videos and photos mainly, and the new Reels feature. And then finally, WhatsApp is the 4th main product, which is another messaging app, but this is more popular outside of the US. They also have a product known as Oculus, which is virtual reality, and this is something which is still in development and in research and development stage, etc. So it's not really a part of it, it's just part of Facebook's other bets, what they're investing in for the future. Now onto the sales breakdown for Facebook, and it's a pretty simple one here. 98% of their revenue comes from advertising via their different platforms, be it on Facebook, Messenger, Instagram. If you're scrolling down their content, you'll come across an advert every so often. WhatsApp doesn't actually have adverts yet, but this is something they will be bringing in, so an interesting growth development. However, for now, it's just on the main platforms, 98% advertising revenue, and you'll see below as well that 42% of their revenue comes from the United States, so that is, by far their largest market. But it is good to see that they have a good portion of their revenue outside the US, so it shows this is a truly global business. Facebook is everywhere apart from China, and this just shows that. Now moving on to the income statement, and as you can see, very impressive to be fair. The revenue has been consistently growing since they have IPO'd, and they are doing some really good things. Their profit margins are staying in the 30% range, which is absolutely phenomenal, and you can see going into the future, analysts are expecting this growth to continue, and a company this size, what Facebook is, it's astonishing how much growth they are seeing, and this is very bullish for the stock and the company itself. You can just see that even though the revenues are increasing, you can just see that the profits are staying, within the margins of previous years, and they're not slowing down. So this is really good news, and what we like to see, pretty simple. We like to see companies which are profitable. It's one of the main things I look for in a business. A lot of people go for these high growth stocks, and Facebook is a high growth stock, but it is profitable, which is very rare. So yeah, it gets a tick from me on this section. Now moving on to the balance sheet for Facebook, and impressive results once again. A net cash position of $62 billion, free cash flow of $24 billion, and return on equity of 25%. So across the board, really good figures. They're the 3 main things I look for on the balance sheet. And yeah, to put it simply, Facebook is a cash generating monster, and as the revenues are growing, so is the free cash flow, and there's no sign of that stopping anytime soon. Now looking at my 4-pillar analysis, so this is an analysis checklist I have. This is a value investor's absolute must. As a value investor myself, I use this to basically screen any stocks I'm looking to buy / I'm interested in. So yeah, looking at Facebook, it's mostly in the green in terms of my analysis. So what's red? Let's have a look. For dividends, Facebook don't pay a dividend. They use all of their internal cash flow to grow the business. So you wouldn't want them to pay a dividend, to be honest, because that would hinder growth. Also a decreasing share count, so they haven't issued any or bought any shares, so the share count just stayed flat for a good few years. I do see this changing as Facebook's growth does stagnate in the coming years potentially. They'll have a lot of cash within the business, and they will use a lot of it to reinvest. But if they have spare cash and they think the business is undervalued, it is good for share buybacks. So we will see if that happens or not. And then the other 2 in the red are the price ratios. You will probably see this quite a lot at the minute, with the market quite hot and potentially overvalued. PE ratio and price to free cash flow are both red, negative, but everything else is a yes from Facebook. I personally think it's a really good business, and my checklist does show this. And yeah, you'll be wondering from the discounted free cash flow. So yeah, I think Facebook is worth over $400. Based on my calculations, essentially, and I will go into this. I will actually have 2 DCF calculations for you in this video, because doing some listening to a podcast I listen to each week, Facebook is actually one of the stocks mentioned, and some really interesting points came up, so I can't wait to share them with you. So yeah, let's go into the DCF calculation for Facebook. This is one I did about 6 months ago, and I came up with a fair value of $267, hence why I bought a good few months ago, and Facebook's now in my portfolio, and I've seen some nice lovely gains, because tech stocks have rallied very well. But yeah, so these figures, of course, I've taken them from Market Screener, analyst estimates, and presumed a 10% return, because that's my return I would like for stocks. So this is what I did from a few months ago, and happy days. However, let's get on to the reason why I think Facebook is worth $400, and it comes from a podcast I have recently listened to, which I will put in the description down below. As part of my weekly routine, I listen to quite a few podcasts, and one of them in question is We Study Billionaires, the Investors Podcast, which was originally with Stig and Preston, but now there's also another guy on it called Trey, who was actually interviewing a guy called Bill Nygren and Mike Nicholas. And these guys both manage Oakmark Capital, and they have like $60 billion under management, so pretty famous value investor, and hence why I'm explaining this point I'm going to make. Essentially, he believes that Facebook is a value play, and it is very undervalued based on the growth ahead for the company. And yeah, essentially going on from that, he was making the case that Facebook actually spends $18 billion per year, or 20% equivalent, 20% of their revenue on research and development each year. So hence in 2020 it was $18 billion. And I will put the description down in this video of an extract which I took from Nasdaq.com, which is basically summarising what this R&D is spent on. So it's spent on AI, machine learning, all sorts of pretty mind-boggling things which Mark Zuckerberg thinks is the future, and a lot of this is going into Facebook's Reality Labs section. So yeah, the premise is that Facebook is spending 20% of its revenue on research and development when it doesn't really need to. So Facebook's product is pretty simple, and they don't need that much R&D to keep up with their product. So what Bill Nygren was essentially saying is, this research and development gets lost in the midst of the income statement, and it makes Facebook's profits lower and free cash flow lower. But it's not really a fair reflection, because at any time Zuckerberg could click his hand and them expenses would just go, and then these R&D expenses would go on top of the free cash flow. So basically, because of the accounting rules, essentially the free cash flow of Facebook is lower than what it probably should be, because of all this R&D research on new products, which at some point will produce revenues on their own. So it is a very interesting prospect, with AI, virtual reality, all of these things. Facebook is investing very heavily into it, and it's not really reflected within its, financial statements. So let's go on to the DCF2, where I reflect these changes and I add 20% of revenue onto the free cash flow for the R&D expenses. So looking at the revised DCF calculation, and as you can see, what I've done is I have adjusted the free cash flow balance, what I had before, but I have added 20% of the revenue / projected revenue, which drastically increases the free cash flow of Facebook, because the premise behind this, remember, like I said before, is that any time Zuckerberg can click his fingers, them expenses are gone and they get added to free cash flow. So when you're buying Facebook, you're basically buying Facebook, the company, and all this R&D which goes along with it, which in the future will produce returns, you would think. So yeah, this shows Facebook in the range of $430. And in the podcast, Bill Nygren himself was talking about, he thinks it's close to 500. So he's very bullish on Facebook itself, and he's a very conservative investor as well, which is makes it all the more interesting. But yeah, over $400 is what I'm thinking personally. And yeah, after learning this piece of information and digesting it and trying to understand what it really means, yeah, I think I'll be having a look at Facebook again. So yeah, my thoughts on Facebook are it's clearly a fantastic company and a fantastic business. It is absolute cash cow, generating tons of cash, and that is the most important thing in business: free cash flow, producing cash consistently, because ultimately the value of a stock is the net present value of its future cash flows. That's it, simple as that, done. So yeah, Facebook's just a fantastic company. I'm really biased because I think it's such a good company. As you can probably see from the video, I'm very bullish on Facebook itself, but the numbers don't lie, and that's the thing. There's no I'm picking numbers out of thin air. I've got these numbers on here, and that's it. There's no bullshit around here. It's as simple as that. So simple really. Facebook's numbers are fantastic. Its growth prospects are fantastic, and ultimately it's going to be in the portfolio for a long time, I think. And then with the news that the R&D spending is kind of manipulating its free cash flow, and these investments in R&D are not shown on the balance sheet but in the income statement, and there's a lot of money on this being spent on AI and the future of whatever the future is. Facebook are going to be involved with it because they're researching about it. So I think it's a really interesting stock for sure, and as you can tell, I like Facebook a lot. As always, this video is not a recommendation to invest or not invest. I'm not a financial advisor, so you should not see this as financial advice at all. I am an amateur investor, a 23-year-old investor who puts videos out on the internet. So do not take everything I say as gospel, and take everything with a pinch of salt, like you always should do. Like you do with all YouTube videos, do not take it as financial advice or you're an idiot, let's be honest. Yeah, so that's pretty simple. Yeah, let me know what you think in the comments, what you think about Facebook stock, and let me know if you hold it, and what your thoughts are, if you're gonna buy it for the long term, or if you're selling, you don't think the growth is there for Facebook, you think it's finished, done. Let me know in the comments, and as always, leave a like on the video as it really does help. Yeah, so if you'd like to learn more about investing, please subscribe to the Harding Herald, my weekly newsletter, become a part of my community where each week I send the 5 most interesting topics in the world of investing, and I send it to you straight to your inbox, amongst with a few memes and a few other YouTube videos, etc. So it's a really good little package you get each week straight into your inbox. So yeah, subscribe to the Harding Herald for more cool investing content. As always, please leave a like and a comment in the video if you enjoyed the video. It really does help me out, and subscribe to my channel if you haven't already. Thank you very much for watching. I will see you next time.